Everybody knows that AI has been the hottest sector of the past 2 years, and no company has shown this more over the past year than Palantir Technologies, rising over 400% in the past year alone. But this leaves the question of what stock can be the next Palantir Technologies. So in today's video, I will be looking at BigBear AI, which has been gaining a lot of comparisons to Palantir recently. And I will try to answer the question of, could BigBear AI become the next Palantir Technologies? Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. Now, first of all, what is BigBear AI? BigBear is a leading provider of AI-powered decision intelligence solutions. Customers and partners rely on BigBear AI's artificial intelligence and predictive analytic capabilities in highly complex, distributed, mission-based operating environments. BigBear provides decision intelligence solutions for supply chain and logistics, enterprise operations, autonomous systems, cybersecurity, and partner with customers to design and implement solutions tailored to their needs. BigBear has been providing AI solutions within the defense and intelligence market for many years and have a growing presence in the commercial sector. And their customers include government and defense, manufacturing and warehouse operations, and healthcare and life sciences. But BigBear has been getting a lot of attention lately as they have been winning major contracts. BigBear demonstrates AI-driven forecasting analysis at Project Convergence. They also confirmed multiple deployments of its biometric software and a strategic partnership in the United Arab Emirates for the deployment of innovative AI-enabled solutions that support digital transformation. But BigBear have plenty of positive catalysts to come because they recently confirmed the company's backlog increased from $168 million at the end of 2023 to $385 million by March 25. And they have secured multiple major government contracts. BigBear has just announced a partnership with defense firm Defcon AI to transform force readiness and joint logistic capabilities. The company intends to co-develop on-demand advanced modeling, simulation, and data integration solutions to support contested logistics, joint force sustainment, and readiness assessments across the global defense enterprise. According to BigBear CEO Kevin McAleenan, the partnership with Defcon AI reflects a strategic alignment of domain expertise and technology capabilities to deliver mission-focused solutions in our core markets. Together, we will help deliver scalable, integrable solutions to the defense community's most pressing logistics and readiness challenges from tactical operations. But this is just one of a string of announcements lately from the company. As of the first quarter 2025, BigBear AI highlighted deploying advanced AI solutions necessary for border and travel security at several U.S. airports, including Dallas-Fort Worth International and Denver International Airport. Looking at MarketBeat, we can see that the consensus price target for BigBear AI stock is $633. This is according to 4 analysts, and price targets are ranging from a low of $4 up to a high of $9. But analysts are divided on this. There's no sell ratings, but 2 rate this as a hold and 2 rate this as a buy. The latest of these price targets was set last month by H.C. Wainwright analyst Scott Buck, who boosted his price target from $6 to $9, reiterating his buy rating. In my last BigBear video, I looked at some simple technical analysis pointing out this area as a key buy zone before we get a reversal. And what happened next was that I was 100% correct and the stock rallied up to its highest price since February, hitting $850 just over a week ago. But here we are again today, and we are once again back in the same position with a very similar looking chart setup, and once again there are indications that the stock could be on the up heading into earnings. And this could be a major catalyst because BigBear are set to report their latest earnings report in a little over a week from now, which should be August 11th. Hopefully, they can show much improved revenue growth in this earnings report. So the question right now is, should you buy BigBear AI stock before August 11th? And this is a very good article on BigBear AI, citing that although the stock has rallied significantly since its last earnings report, the company's bottom line remains deeply in the red, but investors remain optimistic about its deals and collaborations. So let's take a look and see if investing in BigBear AI right now would be a good move before earnings. First of all, how has BigBear stock performed after each time they release their earnings report? So it says here that BigBear stock hasn't gotten much of a boost after earnings in the past year, usually ending up declining after reporting. Now, I don't fully agree with this. Yes, the stock has generally dropped after earnings, but only for a matter of days before moving back up again, with the exception of their earnings report back in February. But in fairness, this was a time when the stock was plummeting as part of a much bigger trend. The whole sector was plummeting at the time, and small cap stocks that had gone on insane rallies at the end of 2024 were hit the hardest. To put this into perspective, Palantir also dropped close to 40% in this time. And even Nvidia, the world's most valuable company, dropped over 32%, dropping over $1 trillion in its market cap. This was, of course, the time when DeepSeek AI hit the headlines and threw the whole AI sector into meltdown for a few weeks. BigBear AI would have needed to produce the earnings report of a lifetime to go up when the entire sector was plummeting. The good news for investors, however, is that after each of the other earnings, the stock still ended up rallying, and it proved to be a great move to buy the stock before earnings, especially November 2024 and May's earnings report, because it has more than doubled since May. But also, in recent months, the company has announced multiple collaborations and agreements with international airports and the US Army, which have given the stock a far greater boost than its earnings reports. The next thing to mention here is that the market may be looking for more signs of progress. There has been a real lack of growth in revenue from BigBear AI at a time when demand for AI-related solutions should be strong. And to make things worse, its losses are also large, and it's not clear if there is a path to profitability anytime soon. However, we have already seen that the company's backlog has been increasing massively over the past few months, and once BigBear begin to actually realize some of this revenue, then their revenue growth should begin to take off, or at least that's what we hope. The upcoming earnings report is going to be vital here. They need to start producing some real growth, or investors will grow tired of waiting very quickly, because in Q1, BigBear AI's revenue only rose 5% year over year to $34.8 million. However, its backlog grew 30% year over year to $385 million, indicating strength in capturing new contracts. But BigBear really needs to start recognizing some revenue from these contracts, because 5% growth simply isn't good enough, especially when we see other companies deliver far higher levels. Palantir saw 45% revenue growth to $373 million in Q1 for its US government-related businesses. Now, I'd argue that it's much more common to see higher percentage growth on lower revenue figures. So when you see Palantir having far higher growth on a far higher level of revenue, I just get the feeling that BigBear is really lagging behind. As it says here, if BigBear were delivering the same growth rate as Palantir with government clients, I'd be far more excited about the stock, but instead it's growing by 5%. So straight away here, I see an opportunity. The time to buy growth stocks is not after they've taken off. The time is when they are just beginning to grow, not afterwards. BigBear has this backlog in place. So assuming that they keep gaining contracts consistently, then all of this has to equate to higher revenue growth eventually. And even though the stock has been rising so much over the past year, it's not that expensive when we look at the price to sales ratio. BigBear has a price to sales ratio of around 10, which is at the low end of a typical 10 to 20 times sales range that software companies are usually valued at. Again, for example here, Palantir has rocketed up to a price to sales ratio of over 104. But again, Palantir is growing its revenues at a very fast rate, while BigBear is not. So that needs to change, and change fast, but we do have an upcoming catalyst. this gives the company a chance to show some impressive growth figures. But guys, what do you think? Can Big Bear return to $10 again, or even set a new 52-week high in the coming weeks? Let me know your thoughts in the comments below, and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe, and I'll catch you in the next video.